Over the last 3 weeks, BlackRock quietly purchased more than $1 billion worth of Bitcoin. Not during a bull run, not during euphoria, during a war. While American and Iranian forces exchanged fire in the Middle East, while markets bled red, while talking heads on financial news told you to sell everything and hide in cash, the largest asset manager on earth was buying Bitcoin by the hundreds of millions. And no one on mainstream television said a word about it. That number, $1.1 billion, deployed into Bitcoin during what most analysts called the most dangerous geopolitical escalation since the Cuban Missile Crisis. Now ask yourself one question. Why would a firm managing $11 trillion in assets make that bet at that exact moment? The answer changes everything about how you should think about your money in 2026. In early March, tensions between the United States and Iran hit a breaking point. Military strikes escalated. Oil prices spiked. The S&P 500 dropped 4% in a single week. Retail investors panicked. Bitcoin fell below $60,000, and crypto Twitter declared yet another death spiral. The fear index hit levels not seen since the pandemic crash. But BlackRock wasn't watching the same screen as you. They were watching a completely different calendar. Because buried in the noise of war and panic was a piece of legislation that almost nobody was paying attention to. The Clarity Act. And what it's about to do will reshape money in America forever. The Clarity Act is the most significant piece of cryptocurrency legislation in United States history. Not because it legalizes Bitcoin. Bitcoin is already legal, but because it does something far more powerful. It creates a complete regulatory framework that tells every bank, every hedge fund, every pension fund, and every sovereign wealth fund exactly how they can hold, trade, and custody digital assets without fear of prosecution. For years, institutional money managers have wanted exposure to Bitcoin, but couldn't justify the regulatory risk to their boards and compliance teams. That barrier kept trillions of dollars on the sidelines, and it is about to be permanently removed. This is why BlackRock was loading up while everyone else was selling. They weren't gambling on Bitcoin's price. They were front-running legislation. They knew the Clarity Act was coming. They knew it would unlock a flood of institutional money that would dwarf their own purchases. And they wanted their position fully built before the rest of the market understood what was happening. Now here's where this gets really interesting. This is not the first time BlackRock has executed this exact playbook. Rewind to late 2023. Bitcoin was sitting at $26,000. Sentiment was destroyed. The media was still writing obituaries for crypto after the FTX collapse. And what did BlackRock do? They filed their spot Bitcoin ETF application. Quietly, strategically. Within 12 months, Bitcoin hit $73,000. Their timing was not luck. It was intelligence. They buy when there is blood in the streets because they have access to information and legal pipelines that you and I will never see. And right now, the blood is everywhere. But the real kicker, the part of this story that should genuinely concern you if you don't own any Bitcoin, is what comes next. The Clarity Act doesn't just open the door for American institutions. It opens the door for the United States government itself. The executive order that Trump signed alongside this bill explicitly states one goal: making America the global capital of Bitcoin and cryptocurrency. That is not a pundit's prediction. That is the stated policy objective of the most powerful government on the planet. Let that sink in for a moment. The same government that spent the last decade trying to regulate crypto out of existence is now racing to accumulate it. The same institutions that publicly called Bitcoin a scam, a bubble, a Ponzi scheme are now deploying billions into it. And the narrative didn't flip because they suddenly became believers in decentralization or financial freedom. It flipped because they realized they cannot stop Bitcoin. So instead of fighting it, they decided to own it. And owning it means buying it before you do. This is where it gets personal. While BlackRock was buying $1 billion in Bitcoin during a war, what were you told to do? You were told the market was crashing. You were told it was too risky. You were told to wait for stability. The financial media, funded by the very institutions now accumulating Bitcoin, told you to sit on the sidelines while they loaded their positions. This is not conspiracy. This is how wealth transfer has worked for centuries. The informed buy from the uninformed during panic, and they sell back to them during euphoria, every single time. Right now, the market is mirroring the 2021 cycle with eerie precision. Analysts expect Bitcoin to consolidate between $45,000 and $60,000 over the coming months before the next major move. That is the accumulation zone. That is exactly where BlackRock is positioning right now. The question is whether you will position alongside them, or whether you'll wait until Bitcoin crosses 100,000 again and every headline tells you it's finally safe to buy. Once the Clarity Act is signed, expect a cascade. Banks will begin offering Bitcoin custody services. Pension funds will add crypto to their allocation models. Insurance companies will diversify into digital assets. And every single one of those institutions will need to buy Bitcoin on the open market, competing for a supply that is mathematically capped at 21 million coins. Over 13 million of those coins have not moved in more than a year. The available float is far thinner than most people realize. When that institutional demand hits a supply wall, the math gets very simple. They will tell you it is too late. They told you that at 10,000. They told you that at 30,000. They told you that at 60,000. Meanwhile, BlackRock just dropped $147 million in a single purchase this week. That is not a hedge. That is a conviction trade from a firm that does not make emotional decisions. The old financial system is not dying. It is being absorbed. Bitcoin is the gravitational force pulling it all in. You can ignore that. You can argue with it. You can wait for permission from the same people who are quietly front-running you right now. Or you can look at what the money is actually doing instead of listening to what the talking heads are saying and make your own decision. The smart money has already moved. Now you know what they know. What you do next is entirely up to you.